Welcome. We're going to have a great talk today. I've been looking forward to it for a while now. My name is Matt Odell. I have a podcast, Tales from the Crypt. I do want to do a quick disclosure here because Parker works with Unchained Capital, and Unchained Capital is a sponsor of my podcast. So I want everyone to be clear on that. I'm friendly with both Ragnar and Parker. So there's my disclosure. And I'd like to start with Ragnar, just to introduce yourself before we move on to the meat of this topic.
Thanks, Matt. Yeah, I'm glad to be here. Looking forward to this. I'm Ragnar Leithracer. I'm the co-founder of Guns and Bitcoin. And my focus is kind of self-protection and financial sovereignty. And I think we might talk a little bit about, the parallels with guns and Bitcoin over here, KYC and stuff. So looking forward to this chat.
Parker?
Yeah, I'm Parker Lewis. I work at a company called Unchained Capital. I lead our business development efforts. I also write a blog or an article series on Bitcoin called Gradually Then Suddenly. And Matt is a sponsor of our podcast, but we don't agree on everything. And I always tell Matt that he better always speak his mind. And I think as everybody who knows Matt knows that he always does.
Yeah, I'm definitely not guilty of holding my tongue, that's for sure, especially when I'm a few whiskeys deep, both personally and on the podcast. So today we're going to be talking about KYC AML, which stands for Know Your Customer / Anti-Money Laundering, which is what that stands for. That's the process of collecting user information when offering goods or services to users. Usually in the Bitcoin world, you see that in terms of providing a name, address, email, phone number, sometimes social security number, sometimes a scan of a driver's license or a passport. In some cases, I know BlockFi just added it. I think Binance has it sometimes. They do a facial scan with a phone. So we see it in all different ways. From less user information to more user information. Sometimes it's just an email address. Sometimes it's the full tilt. And we see that in our everyday lives all over the place. This is not just a Bitcoin thing. KYC has seeped into like almost everything we touch on a daily basis. On Twitter, they try and push you into authenticating with a phone number. When it comes to getting a phone number without attaching it to your ID, it is a difficult process where you have to really go out of your way to try and get a phone number that isn't linked to your individual. We see with credit cards, it's just baked in. You have your billing address, you have your shipping address. I mean, the billing address is the important part. And when you use that credit card, then that KYC information is following you. So if you go to a site and you buy a coffee mug and you put in your credit card information and your billing address and they check all that stuff, they are essentially KYCing you just indirectly. And a lot of people, I think, don't realize that. Mm-hmm. But now it's starting to touch the Bitcoin world, where it didn't really touch the Bitcoin world when Bitcoin was first starting out. And that poses a very big privacy risk to users. So that's what we're going to discuss today. I think it's a very important topic. I think both Parker and Ragnar agree that's a very important topic for Bitcoiners. Specifically individual Bitcoiners, just to understand what they're working with here. So I'd like to start with Ragnar, just to frame what his concern is with all this KYC collection, and then we'll take it from there.
Thanks, Matt. So for me, my concern is that the state is the greatest threat to Bitcoin. It always has been, and it always will be. And KYC is the state. KYC is exactly how the state seeks to control Bitcoin. So Bitcoin, as we know, was designed and works as a peer-to-peer network, and it has pseudonymous users. And as soon as you do KYC, you insert a third party between peers, and you connect identity to UTXOs, to addresses. So KYC basically takes the basic nature of Bitcoin, peer-to-peer and pseudonymous, and completely, eliminates both in one quick step. So that's a really big deal. as we know, Bitcoin is supposed to separate identity from state and money from state. And Matt, you pointed out a really good point, which was, KYC identity attached to ourselves is all around us and everything we do. And Bitcoin is one of the last places where we can not have KYC and we can separate ourselves from our transactions. We can't control that, with our phone. It's really hard. We can't control that with bank accounts, PayPal, so many things, but with Bitcoin we can. So it's sort of the last refuge from the state.
I just want to add in here that the argument, the state's argument for KYC is it's to stop fraud and criminal usage. It is not very effective at doing either of those things because criminals often can use fake documents. They can buy the documents, they can steal the documents to get through these different KYC checks, while the average user ends up getting, put in a database based off of it. I think Parker would agree that KYC, that a lot of these KYC laws are overbearing. Would you agree with that, Parker?
Yeah, I would agree. I would say it another way. I would say that AML KYC rules create risk for honest citizens probably disproportionately than they do solve problems of preventing drugs from being moved to the United States and money to be laundered, or trafficking of minors, or human trafficking of any kind. And I think part of the evidence of that is looking at kind of each year the fines that are paid by the banks for helping to or not having a robust enough, or quote robust enough, AML process. That money laundering happens. It's just a fact. Despite all of these rules, it's almost a function of if you think about fraud protection in your debit card, it's a baked-in cost essentially to the banking business. And so I think that the kind of and I don't think it as simplistically as this, but I do think of it as that if we have bad laws, we should change the laws. And then when we think about our services and kind of at what level of services, depending on the nature of them, what KYC information we require to be compliant with laws, kind of whether or not the value that we're actually delivering is balancing the trade-offs, and that not only kind of clients be aware, but that if the risk that we potentially create by potentially being a source of failure in terms of private information, that the value that's extracted of in kind of one case of securing Bitcoin must raise to fully trade off or to outweigh those risks. But I think all of that can be true while agreeing that the rules as they exist in place probably not probably do more harm than good, and they don't actually prevent the problems that they're trying to prevent. And that if you create rules to restrict, like because one way to think about it would be money laundering is illegal. So if a criminal that's laundering money is already engaging in some illegal activity, who is going to do something more likely to circumvent those rules or to adapt to them? It is the criminals. Dealing drugs is illegal now. That's probably a different debate of whether or not it should be, but there's nothing about the financial apparatus. It's like, hey, if you're using your phone, you're similarly using technology and a third-party resource to facilitate a crime. And so I think that there's nothing about the financial apparatus that is unique to facilitation of quote crime, and that ultimately they're misguided rules. They should be changed. And that kind of in terms of my view, it is like I view keys being as most important in Bitcoin, and that if the network is controlled in the most decentralized way as possible. That if we're living in a world in the future with 300, or just say the United States with 300 million Bitcoiners, those people will think a lot differently than the construction of 300 million Americans think today about privacy, but then also more specifically financial privacy.
Thank you, Parker. Just to unpack that a little bit, I mean, I think the two biggest risks here in terms of this private information collection that is compelled by state regulations, all these companies that pretty much all the companies that have implemented KYC have done so because they're required to under the laws that they're working in, what jurisdiction they're based in. I think most companies would prefer not to collect that information because it does add friction to your service. Like, why would you, as a user, like if they have to scan their passport or something, that is going to make them less likely to use your app or your service. I think the two biggest risks here are tracking of transactions. So just breaking down financial privacy in general, specifically because Bitcoin's a ledger that exists in perpetuity if it's successful, and potential confiscation by certain governments if they try and go down a confiscation route. Ragnar, is that what you think here? Are those the two main risks that you see here from a fundamental level?
Yeah, those are two big risks. Obviously, being able to track all of your Bitcoin transactions and then being able to confiscate your Bitcoin. I would add two more to that. For the third one, I would say preventing people from using Bitcoin. So if you're someone who's been deplatformed, like Andrew Torba of Gab, he can't functionally use Bitcoin if he tries to use any of the regulated exchanges. And the fourth threat I would add is that KYC actually changes the nature of Bitcoin, and it changes it from peer-to-peer and pseudonymous to third-party and not pseudonymous. And especially over time, as it's more convenient in every other way to do that. That's what Bitcoin has morphed into. And I've really seen that from like the early days of Bitcoin, where there wasn't KYC Aml because there weren't exchanges really, or there were exchanges, but they didn't collect that information. And back then, it was different because Bitcoin really was a lot more pseudonymous because there wasn't KYC AML. And not only that, but besides the pseudonymy, I would say just how people view Bitcoin now, because as people no longer think of it as peer-to-peer and pseudonymous, they just think of it as a stock now, right? You buy stock in an exchange and you buy your Bitcoin in an exchange. So it's also morphed the nature of Bitcoin. In trade, it's transformed the incentives. And another quick note on that is, the IRS and taxes. So kind of how the IRS has so much power to collect taxes is through KYC AML. And Matt, you could talk about Coinbase, but I would say is that also alters the nature of Bitcoin, because what I've heard a lot is, well, I don't want to use Bitcoin for transactions because I have to track, all those to pay my taxes on it, and I don't want to pay all that, so I just won't use it for transactions. Or people will say, well, I don't want to sell my Bitcoin until at least 12 months because I don't want to pay more taxes rather than capital gains. So now you have people just not using Bitcoin in the way they want to, simply for just, tax reasons. And so at that point, Bitcoin is a stock. And so going back from the very beginning, the genesis of all that is, KYC AML being able to then collect taxes, which then changes the incentives. So KYC to me is the greatest existential risk, not only to users, but just to Bitcoin itself and the nature of Bitcoin.
Great. Parker, do you have a response here? Anything?
Yeah, I would think about it a little bit differently because I have a different perspective on it, which is, and Ragnar may have been involved kind of earlier than I have been, and so he may have a different perspective that I wouldn't have, and I certainly appreciate that. I think that when I think about reading peer-to-peer network, I think I probably read it less literally. I think that when we think about the construction of our current financial system, practically every transaction goes through a central bank. And that I view the central bank as probably the greatest risk to our freedoms and the ability for people to carry out the lives that they want to carry out. And that's the singular problem that I expect and believe Bitcoin to solve. I think, because I think so many things are derivative of that. The federal government would not have a $6 trillion budget this year and a $3 trillion deficit if it didn't have the ability via the Fed to print money. The IRS wouldn't have necessarily the resources that it has to go after people. And then I think when I read, the idea of peer-to-peer, I think peer-to-peer can mean institution to institution. It can be individual to institution. It can be individual to business. I read it as being not having to go through a central bank to complete a transaction, because that central bank exerts a lot of power as a function of not necessarily being a single point of failure, but being a single routing node. And but I do think that there's a distinction, that I would draw between, and it's really why I don't have the perspective, or I don't believe that KYC is an existential threat to Bitcoin, is because if users themselves are actually holding keys, and today, despite the fact that the Coinbases of the world and the Krakens of the world do hold a lot of Bitcoin, based on, again, we don't do chain analysis, based on kind of research that other people have done that we've reviewed, kind of estimating that 10 to 11 million Bitcoin are not held by third-party financial institutions. And if 3 to 4 million of 18 million Bitcoin are lost, then 75% of despite the rise of large institutions coming in and participating, a lot of people start at that route, and then they end up learning why they should be holding their keys and why they shouldn't be taking somebody else's counterparty risk, and that why they should be preserving their ability to, I think to Ragnar's point, be able to, when they want to, directly interact with peers. I happen to define that as companies, as well as individuals, as well as financial institutions. And that if that is preserved and that ability is promoted, that ultimately, and I think if I visualize the Bitcoin network over time, and really what I think is most important is getting the most Bitcoin into the most people's hands as quickly as possible, that provides the greatest security benefit to the network. Now, that doesn't necessarily exist if more people are, quote, owning Bitcoin, but they're really just a liability of Coinbase, that there is a distinction there. And that the more the economic power is of the network, or ownership of the network is distributed, the less likely a state actor is able to, via force or using an intermediary as a financial institution to do that, to exert power onto the network.
Do you think that we could see like Executive Order 6102 type situation happen, either in America or in other countries? Is that a risk?
I think it's a risk. I think there's a reality that it would be much harder to effectuate in Bitcoin than what happened with gold. I think that there was already a natural centralization of gold that was occurring, and that because of the distinctions between gold, gold is difficult to transfer. It was a primary limiting factor of its effectiveness as a monetary medium, and that basically relying on banking partners to provide trust then allowed for centralization that then made it easier to co-opt the gold network, essentially. And I think that that there is a risk that if people opt to keep Bitcoin on exchanges or with third-party custodians, the fewer actors that are controlling a larger share of the economic value of the network, the easier it is to co-opt a smaller number of people into doing something. And so if we got into a situation where it was reversed, where 80% of Bitcoin was held on third-party exchanges, I would view then a 6102 type act as not just being a possibility, but shifting over into being a probability. I think that there's a lot of steps that probably happen between there. There's probably and again, I think they'll likely be unconstitutional and they'll be challenged, but there'll be, people, in Congress that say, hey, we need to, I don't care if you're working with a third party, disclose to me all your public addresses. Or if, just this year when I was filling out my taxes, did you buy cryptocurrency in 2019, right? Like there's a distinction between, where is the failure point? Because if the government thinks that you've committed a crime and they come to you and they say, hey, give us your, financial information, they can ask you and you can decide whether or not to, to work within a court order or be in contempt of a court order or not. It's just drawing the distinction. Are you going to be fully in control of that? Is a company going to be? And are there other risks? And I think that when we think about the spectrum, it's thinking about what's going to happen most probabilistically first. I think that it's probably, well, we're already seeing it with the IRS. The next step is, trying to get all individuals to disclose it. I think that will be a battle. And then the next step is kind of potentially a 6102. But I think at that point, if Bitcoin is, or if Bitcoin's gotten in the hands of 500 million people or 1 billion people, and they're spread out all over the world, the ability to then effectively, enact a 6102 order becomes smaller and smaller with time, effectively.
So just to be clear here for the listeners, because I probably should have said it before I asked you the question, is Executive Order 6102 happened in 1933, I think. And it was the federal government made private ownership of gold. The US federal government made private ownership of gold illegal. And if you didn't hand over your gold, there was a hefty fine, I think, was attached to it. Am I correct there, Parker?
Yeah, I think it was up to $10,000, and it was maybe up to $5,000 and 10 years in jail.
But it was a different $5,000. Like back then, $5,000 was a lot of money.
Yes. Yeah.
Okay. Do you have anything to add on here, Ragnar?
Yeah, I would disagree on both those points. So we have 2 points here, right? First is distinguishing KYC from self-custodying your Bitcoin. In other words, holding your private keys, so holding your Bitcoin. So we got to really distinguish between those two things because they're obviously pretty different. So we should try to focus on KYC AML. And then for that executive order, I would say that it would actually be easier to seize people's Bitcoin than it was for the federal government to seize people's gold. And the reason why I think that is back in the 1930s, there wasn't, a good record of people who owned gold. You could have gotten gold, maybe down at your local bank. There wasn't this giant surveillance record of who owned gold. So whereas with KYC AML Bitcoin, there's this perfect record of who owns Bitcoin. So if they did that order 6102 for Bitcoin, it'd be easy. They would just go to all the exchanges and they would just say, give us your list. And even if I took let's say I bought Bitcoin on Swan Bitcoin or Coinbase, but I sent it to my own wallet and I control it and I have my node, the government can still go to me and say, that's great. You have it, on your own wallet, but we know you have it. And so give us your Bitcoin. And I can say, well, I say no, like I have the private keys, good luck, come and get me. And they will. They will put a court order against me. And if I don't give them my Bitcoin, they will take all of my other assets. So let's say I have, $10,000 in Bitcoin. They'll say, okay, you won't give us your Bitcoin, but, sell your house. We'll, attach, orders to your bank account. So effectively, they're able to get that amount of Bitcoin and actually much more due to penalties and can put me in jail. So it's because of KYC. KYC is forever. KYC is forever. So it doesn't matter if you transfer it to your own wallet. It doesn't matter if you then mix them. Once your identity is attached to those Bitcoin, it's forever. So that's why, even though, obviously it's very good to self-custody your Bitcoin with your own private keys, KYC somewhat, or I would say largely makes that ineffective for the state. And, also going back for a minute, for the KYC AML stuff, I think that, there's KYC that people don't really realize that's happening. And so I think we should just kind of focus on the KYC AML stuff, and we could talk about Coinbase and the IRS. And that's what I was getting at, was that yes, there's not an executive order taking people's Bitcoin, but there kind of is, right? Because the IRS collects taxes from your Bitcoin. So let's say I have $10,000 in Bitcoin, and I do transactions and I sell some Bitcoin. Well, they took a portion of my Bitcoin through taxes. So taxation is a way that they actually take your Bitcoin as well.
Yeah, I mean, I would just say the reason why I brought up keys is because I think when I consider the question like, is KYC an existential threat to Bitcoin? It's thinking about, well, there's a spectrum, and so I think we'll focus this conversation on the KYC angle and the degree of threat. I was raising it because, in my view, that key ownership and the greater distribution of that is ultimately what protects the network, and that to Ragnar's point, and I would disagree, because I think on the question of kind of everyone back in 1933, practically everybody, gold was the predominant monetary medium. Dollars were just kind of over the more recent past becoming more and more prevalent, but you could make an assumption practically everybody had gold, and that increasingly that gold was already stored at third parties that had some record. So it's like, hey, there's a bank there, the bank has gold, the bank certainly knows who the customers were. And I think that's another distinction that happens. It's a bank, they may not have reporting requirements back kind of in the early 1900s, but they certainly had to have some idea of who their customers were. And that when we think about again, because I think it's 2 points, it's one, gold was already centralizing, so there were already central points of failure. So while there may not have been reporting requirements, people knew where to find the vast majority of gold. And then separately, that already, like the IRS doesn't need to know that you're a Coinbase customer to know that you own Bitcoin. Now you could lie on your IRS form, right? They have many other ways to find that out other than working with third parties. And that becomes an individual decision whether or not you're going to disclose that or not. But it's also not just Coinbase, it's Trezor and Ledger if you're buying hardware devices. And I think I certainly recognize, and there's ways that you could probably buy Trezors and Ledgers without disclosing your personal identity, but that people also need to be aware of other risks, of anything that could tie your ownership of Bitcoin. It's not just necessarily a financial institution, and the disclosure risk probably varies depending on the nature of the service.
Well, Parker just kind of hit on something that I wanted to unpack here with Ragnar specifically. Not necessarily buying the hardware wallet from Ledger or Trezor, even though that obviously does signify that you're a Bitcoin user, or at least a crypto user. As we just saw with the Ledger's database just got hacked. That wasn't even government sharing. Their database got hacked. 1 million email addresses got exposed. 9,500 either phone number, first name, last name, or mailing addresses got exposed. So where you live, and that wasn't even just to governments, that that's presumably to bad actors as well, who could be buying this on dark markets or whatnot. But there's a lot of ways where Bitcoiners are leaking information, and I think KYC is a massive risk. I think most of the listeners here probably know how I feel about it here, and I'm trying to be the best moderator I can be, but I have a very strong opinion on this topic. So it's kind of, I'm trying to do my best. If an organization is storing KYC information, they're obviously a good target for government, especially if they're operating in their jurisdiction, to pressure them for information. We saw with the Twitter hacker, they said, we need this specific user, and they got that specific user's information. It's different than getting a broad claim to all user information. I mean, most of us hate Coinbase. We think Coinbase has very little ethics or morals. But even they fought the IRS in 2016 when the IRS wanted to get every single Coinbase user's information, and Coinbase reduced that. They fought that and reduced it down to 14,000. So I think we can hope that maybe these companies, and I think Unchained would actually like try and fight back any kind of broad-based user data. But when we're talking about broad-based user data, Trezor and Ledger specifically are the two most popular hardware wallets on the market. And most people who use them are using Trezor and Ledger's node. When you interact with the Bitcoin network, you need to use a node to interact with the Bitcoin network. And if you're using someone else's node, they see your IP address and they see your transactions. So Ragnar, do you have a similar concern there in terms of that if you're not using your own node and you're using Trezor or Ledger, I mean, that IP address is completely tied to your identity. Like the government knows exactly whose IP address is what.
Yeah, no, Matt, you bring up a good point, which there's all these other ways that we can, leak our information, whether it's through buying a hardware wallet, especially if you buy it with a credit card, stuff like that. And so many different ways, like your IP address, not using your node. But you bring up kind of an interesting point, which is what happens when you don't use Bitcoin as your method of payment, right? Spending Bitcoin has become, a sin for hodl monomaniacs. And so what I would say there is not using Bitcoin is an issue, right? Because if you use Bitcoin and if you use, PO box, and if you don't use your real name, and if you don't use an email that is associated with you, like you just have an email just for like Bitcoin stuff and it's not your real name, that in itself gives you a lot of privacy. And, I, have guns in Bitcoin and, people pay us in Bitcoin. And I love it because I look at the people who pay with Bitcoin and I don't know their real name. They put Joe Bob or they put these pretty funny names, some I can't repeat. And especially when they send it to a PO box or even a hotel, I love it because now I don't have that information. I don't know that, this person, who they are and that they own Bitcoin. So there's all these steps, and which you would probably know a lot more than I do, all the ways you could leak information, but just using Bitcoin as your method of payment helps. Because if you use your credit card with a Bitcoin thing, well, obviously all your personal identifying information is with the credit card. With Bitcoin is not so associated with it.
Yeah, I mean, we know all credit card purchases, that's like the leakiest sieve ever. Like all credit card purchases are not only being shared with governments, they're being bought and sold by marketing agencies, just like left and right.
And I would say that going even farther with it, I would say that actively discouraging people to not spend their Bitcoin is an attack on Bitcoin. And I would say people who are actively discouraging people not to spend their Bitcoin is statist. Because when you're not using Bitcoin as your method of payment, you're using your credit card or PayPal, right? Which means you are sharing your information not only with them, but with the government and whoever they sell your information to. So I think it's very anti-privacy advocacy, very anti-privacy in general to not encourage people to spend their Bitcoin. And I'm just really shocked that, it's one thing to say, hey, hodling, right? I hodl, have for a while. And I think that's good, but that's gone way too far. Well, now people will say only hodl, don't spend your Bitcoin. So going back to your original point, there's a lot of ways to leak your personal identifying information. And one of those is to not use Bitcoin as your method of payment.
But using Bitcoin can also leak your personal information.
It can, but nothing like using a third party.
Well, the Twitter hacker, if Bitcoin has so many privacy gotchas that with the Twitter hacker, the most obvious connection to his real life identity was the way he used Bitcoin.
Mm-hmm. Yeah. So, but just starting at like a most basic level, like buying a Trezor, right? So if you use a credit card to buy a Trezor, they don't need to hack your email. They just already know who you are. Whereas if you use Bitcoin, Trezor doesn't know who I am, especially like a PO box. Now the government records who owns a PO box, but there's other things that you can do to kind of avoid that. And I have hands-on experience with this because I sell things and I see orders come in and I have that information and I hope, our database never gets hacked, but if it does. So, and there's a more important point too, to spending Bitcoin, which is There's so many people who use Coinbase and these KYC AML exchanges because it's so convenient, right? It's so easy. They have liquidity. It's pretty much instant. Well, that's because there's not a lot of Bitcoin in circulation. Imagine you can get paid in Bitcoin as easily as you can get paid in fiat, right? For whatever you do, whether you're a contractor, an employee, or you own a tire shop, if everyone is getting paid in Bitcoin or some significant portion, that's a large amount of Bitcoin that you don't have to buy through a regulated exchange. And now people think, well, that's impossible. Like new people don't want to do that. But hey, I remember when there weren't exchanges. I earned my first Bitcoin in a faucet, and then local Bitcoins before it was KYC AML. So again, if more people use it as their method of payment, more people would be acquiring Bitcoin without KYC AML.
Parker, do you have any thoughts here before we jump into circular economy?
Yeah, well, I kind of felt like we were going to circular economy, but I mean, look, I think that there's I look at it two ways, and sometimes maybe overly simplistically. If everybody in the world is going to have Bitcoin, in my opinion, and I think that that in that world, if you said, okay, all Americans, it's just money, and I think in that world, everyone's going to be using it day to day. They're both like every Bitcoin that exists is being used 100% of the time, and everybody is determining how they want to use it. They're using it when it's not moving, and then they're using it when it's transferring. And so if we look toward a world where 300 million Americans have Bitcoin or 7 billion people have Bitcoin, it's like, if you know that everybody has Bitcoin, then, and you have a problem with them using Bitcoin, you just go knock on their door. Like so I think the critical point is, does AML KYC prevent us from getting to that point? Because I do think that, and probably not everybody and not in the same way, certainly, but if everybody has Bitcoin and we all wake up to the fact that what happened in 1933, like if that tried to happen again, it's like, fool me once, shame on you, fool me twice, shame on me. Like at some point there has to be like an aggregate waking up to, we're not just going to continue to allow we're not going to continue to run into, to try to avoid what are otherwise unjust or unconstitutional laws. Like at some point you just have to say, okay, I'm going to stop hiding from this. I'm going to face it, directly. And that I also think about that with a world, again, the more people that learn about Bitcoin, like it forces you to care about these things. I think people, I would believe reasonably have disagreements as to necessarily the solutions, but it makes everybody more conscious of them. Not everybody to a person, but it reinforces that. And the more people that have those ideas reinforced, the more differently they're going to think about things, and that the more and also differently how they'll respond to certain types of actions from the government. Because I do think that it's like, even if you're buying and selling Bitcoin or you're receiving payment for Bitcoin, if the government comes and says, hey, disclose all of your Bitcoin addresses, and we're living in a time where 80% plus of people don't, then they're going to assume that if you're not disclosing it, that you're guilty because you haven't. And nothing about AML KYC changes that. Nothing about AML KYC changes the fact that governments will do things outside of working with financial institutions to restrict both your privacy as well as your financial privacy. And it's like, how do we solve that? Because I view AML KYC as a bad law, but then I think of it as, well, if we're offering a service, so we help people with multi-sig and they have, we hold one key and we're helping them feel more secure over their Bitcoin. Now, we're not taking them as deposits. So, maybe a consideration where, if you read the IRS rule by the letter of the law, you have to disclose transactions over $10,000 that you're facilitating. We don't consider ourselves as facilitating those transactions because individuals have their own keys and they're signing transactions. So I think now we don't just do that to structure around laws. We effectively think about a service from a first principle and say, does it make sense? And if we think that it makes sense, what's the best way to limit risk as it relates to then regulation? But if you're just doing things because of regulation, if those regulations are bad laws, then you're naturally going to, I think, come up with bad solutions.
Great. So Ragnar, you touched on two things here. And I mean, the topic of this talk is, can KYC stop Bitcoin? You earlier, you said, Andrew Torba, he got demonetized. We see people getting demonetized all the time. He can't use PayPal. He can't use the banks. The credit card processors all blocked off him and his business. He obviously can't use Coinbase. He can't use Cash App. He can't use any of these regulated services to obtain Bitcoin or accept Bitcoin. On my hat, I have BTC Pay Server, which is an open source project, which anyone can download, can fork, can run on their own, completely self-sovereign with their own node. Andrew Torba can do that. He can use BTC Pay to accept Bitcoin payments for his business. This is kind of the circular economy that you were just discussing right before Parker, right here. Is this, to me, I think this is something that will emerge over time as more people have Bitcoin, because ultimately, if Andrew needs to accept Bitcoin, if he's accepting Bitcoin for his store, he needs users that are paying him Bitcoin. Yeah. And I think long term, the circular economy kind of obviates a lot of these choke points, these centralized choke points we see of these on ramps and the off ramps where Bitcoin is touching fiat. I think you disagree with me there, right? Like, do you think that the circular economy is something that we can wait for, that will happen over time?
I don't think it's something we can wait for at all. So just big picture, I'm not someone who thinks there's going to be mass adoption of Bitcoin like ever. I think if like an optimistic point would be 10% of the world's population adopts Bitcoin within like 30 years. So no, we can't wait for a circular economy to just build over time. In some ways, you could say we had a more robust circular economy, 5 years ago. I don't know exact numbers, but the Silk Road, that was a circular economy. And if you looked at the numbers back then, that might be greater than what we have now. I don't know. Like, obviously we have dark net markets now. I don't know what their volume is, but the point is that even back then we had circular economy. Like Mandrick, you probably know him, like he used to sell baklava for Bitcoin. And he made this joke about, remember when like the Apple store wouldn't allow the blockchain.info wallet in their app store. And he reminded us of like, well, people uploaded videos of themselves like destroying their iPhones and stuff. And he's like, that wouldn't really happen today. So going back to the point about, mass adoption, if we get more adoption, we get a more circular economy, therefore less KYC AML. And if we get more adoption, then everyone has Bitcoin. So then it's harder to like pin it on one person, and KYC doesn't become as relevant because everyone owns Bitcoin. So you just can assume everyone does. So you can just go, just knock on their door. But this is a major problem, because what KYC AML does is it makes it very convenient for people to own Bitcoin. And most of those people will always be the type of users who lack a certain philosophical viewpoint of Bitcoin, and they simply don't care about any of this. They don't care about privacy. They don't care about alternative markets. They don't care about routing around the state. They don't care about separating their identity. These are people, normies, as we call them, maybe condescendingly, but normally normies don't run their own nodes. They don't self-custody. Normies aren't the mass adoption that is going to get us away from KYC. In fact, if you compare kind of the earlier users of Bitcoin versus the Bitcoiners now, the Bitcoiners now is in some ways made Bitcoin weaker. We have more numbers, but I would say maybe it makes Bitcoin weaker, because these aren't people who are willing to get Bitcoin off of exchanges. So I see more adoption as like a bad thing. And I think it's going to make, maybe the price go up. And going back to like, what is the solution to this? Like, I think all three of us clearly agree that, KYC is bad for various reasons and to various, extent. So why in the world do we have KYC? Like, if it's so bad, like, why do we even have it? And why isn't everyone in Bitcoin like screaming like, don't do KYC only if you have to, like it's the last resort. And there's two reasons why people aren't a lot more against this. It's number one, it's convenience, right? Because it's so convenient. And number two, the idea is we want mass adoption, right? The idea is we can't get mass adoption unless we have these easy, on-ramps, unless we have these fiat on-ramps that are convenient, easy to use for the normal person. We're not going to have mass adoption. And I would agree that most people, we're going to have a lot fewer numbers of Bitcoiners if there's not like the Coinbases of the world. But to me, I'm fine with that. Like, I wish it wasn't that convenient to buy Bitcoin. I think we have way too many users as it is with Bitcoin. And so I think more normies and mass adoption either isn't going to happen. And even if it does, it's going to actually be bad for Bitcoin. What
I'm trying to unpack here is how much of this is KYC AML's fault and how much is this the vulnerabilities of the privacy guarantees in Bitcoin itself? And do you think that if we saw any kind of state attack here, because let's be honest, we haven't really seen, at least in the developed world, any kind of big state attack in terms of blacklisting, address disclosures, confiscation type of 6102 events. If we saw that kind of event, would people see the need? Do you think like there would be more support for, maybe better Bitcoin privacy tools and usage?
I think if we were to have like a lot more aggressive attack, as you mentioned, I don't know if it would even matter, because at that point, everyone, a lot of people would kind of give up on Bitcoin, and then we'll just say, this is too much of a hassle. I don't want to go to jail. I don't want to pay fines. They would just sell their Bitcoin and move on with their lives. And at that point, what is Bitcoin? So yeah, that is like a symptom of that, I would say. And in terms of going back, I think what you mentioned was like, how much of it is KYC? How much of it is just like Bitcoin itself? It's like, well, we're kind of stuck with how Bitcoin is, we're making it better every week, and we can change that. But KYC AML, we can't, change that. And so that's why we have to sort of try to eliminate as much as we can. And you mentioned blacklist. Maybe we should talk about that, because what is it? Just a couple of weeks ago, they started talking about that blacklists of the exchanges.
When did they talk about that?
Oh, it was talking about the travel rule. And what was that? It was the data sharing between certain exchanges.
Oh yeah. So it was the travel rule. There's a group of exchanges that are doing a working group to comply with the FATFA travel rule, which says that the transactions greater than 1,000, they need to know who the sender and the receiver of each transaction is. So if they send to another exchange, they exchange that information to each other.
And from that, they can then build, I think they even have it in some informal way, like blacklists, I think. And like, for example, once I think that Twitter hacker, I think they traced the Bitcoin somewhere, and I think it was Coinbase.
Yeah, and Binance.
Shut off. What was it?
Oh, Coinbase and Binance had KYC information on him, and that's how they detected him. That's why I was saying, like, sometimes using Bitcoin, like the ultimate privacy is cash. Sometimes using Bitcoin is the privacy hole in itself. And then also separately, Coinbase and some other exchanges blocked transfers to the scam address, which is a slippery slope. Like if they're just going to stop you from sending out at will if they have custody, which is the difference between non-custodial versus custodial. We are running out of time here. So I want to bring it back to Parker, and I want to ask Parker, give us the optimistic take here. Give us the optimistic take about how KYC can stop Bitcoin.
I mean, I think that there's a part of it that I think Ragnar and I probably disagree on in terms of I'm not somebody who wants mass. I mean, in certain ways, I think I do want mass adoption, not because I want the value to go up, because I think that if the entire world was operating on Bitcoin, that would be a much more resilient economy, and individually people would be able to pursue better lives. But it's not like something that I'm rooting for. The way that I look at Bitcoin, it's like mass adoption is inevitable. Here's this extremely powerful tool, and money is a necessity, and virtually everybody in the world needs money, and fiat has structural problems and they're all going to fail. So their only option is going to be to use Bitcoin. Everyone's going to be hyper incentivized to do that. And so when I think about the problems of AML KYC, I always think about them in relation to what is more easy to attack, a smaller network of people to go after people, or if 60 million people own something, or 120 million people, or 306 billion, that it's just not only technically harder to attack and technically more secure because the ownership of the network is more distributed, but that the consequence or the failure point of any single individual institution will be much smaller in that world as well. Like, we won't have JP Morgans of the world that control as much power as they do. And so I think the way that I bring it back to AML KYC is that I naturally think it's a problem. I don't think that it's existential, because I think Bitcoin is bigger than it. But that may be somewhere where Ragnar and I fundamentally just disagree. And I think it's okay to have disagreement and people have their different ideas. But that what we can do is, kind of, one, recognize that not all actors and not all AML KYC are the same, right? You have a Coinbase that buys chain analysis that actively, sells contracts to the IRS, and that you have other companies that kind of evaluate kind of the need necessarily to have certain pieces of information to be able to deliver the service that they are, and how do you minimize the impact of that on your clients. And one of the things that we do at Unchained is, because you mentioned BTC Pay Server. Now, BTC Pay Server probably doesn't exist if 60 million people don't adopt Bitcoin. We developed Caravan. So while we have our service and there's certain pieces of value that you can get through our service, but we need your information not only to be compliant, but to actually fulfill it, you can also use our open source application Caravan to just secure your Bitcoin. And we'd like to someday be able to, integrate, be able to someone to pull Caravan addresses, with their BTC Pay servers. So a lot of that gets built, and a lot of it gets built based on incentives of people in the network. And the people that are actually building don't all look at AML KYC differently, and they mitigate risk differently, partly in terms of how they structure products, but then also what their inclination is or how important that they think it is. And so I think it's probably first and foremost and most important to talk about it, to educate people so that they know that they should be concerned about these things. And then evaluating not only whether or not they want to use companies, but evaluating it based on what is the service, what is the value that I'm getting for it. I know that I'm having a trade-off that is financial privacy. Is it worth it? Do I think that actor is worthy of having my privacy? Or is there other technology that I can use that may be a better fit?
Great. This was a fantastic conversation, guys. We're getting the wrap-up notice. We're out of time. I appreciate you both joining me for it. I think the listeners, hopefully they've gotten a lot out of it. Do you want to just quickly tell the listeners where they can find you? We'll start with Ragnar.
Yeah, you can find me on Twitter at Ragnarly, and then also on Keybase and Telegram, same thing, Ragnarly.
Me?
Yep, all you, Parker.
All right, you can find me on Twitter at Parker A. Lewis, and you can find us at our website, unchained-capital.com. I write a series I mentioned at the beginning, Graduate and Suddenly, so you can find that on our blog. But then you can also, I tweeted out, and we'll be at the BitBlock Boom conference in Dallas at the end of this month. And everybody should, if you're comfortable getting out of lockdown, which I am, so I'll be there, but everyone make their own decision. But I hope that we can get a bunch of Bitcoiners together, and it should be a good time. We had a great time last year.
I look forward to seeing you there. Cheers, guys, and a big thank you to Bitcoin Magazine.